But let's go across to Peter McGuire first, who joins in to tell us what he's making of those mixed global cues. Peter, let's talk about the US because the dollar is on the defensive. It trades at a year low on back of Trump once again facing pressure with his reform on the healthcare bill. Apart from that, it seems like there could be some more pressure. It could be a divided house once again on US tax reforms. Where do you think the markets are going to be focusing on? Will it be earnings in the US, which aren't looking too bad? I mean, we had the likes of a Johnson & Johnson that haven't done too badly. Goldman, of course, was a disappointment. Or will the focus once again move to Washington, D.C.?
Well, good morning, Samina. Thanks for inviting me on the show. I think really what you're saying as far as earnings is that's the headline. People are certainly keeping an eye on that from a trading perspective and what happens over the future months. As far as Trump, he's really got his hands full on so many different agendas. We would have thought by now that there would have been some action to the upside as far as infrastructure, but he may be sitting on the sidelines on that, getting the medical side over the line, and then, if he can, and then moving forward in some capacity to introduce an infrastructure spend in the second half of this term. So, we spoke about copper prices. We've seen what's happening, large stockpiles and so on. I think everyone's just waiting for the president to hit the go button.
Let's talk about what that's doing to the currency markets. The dollar trades at a one-year low. It's on the defensive. Bond yields, not just in the US, but across Asia as well, have come crashing. How would you trade both these asset classes?
I think dollar, you've got to be very mindful, and we're the largest FX trader in the world for retail, and we're very conscious as far as US dollar and what's happened in a matter of months. Yeah, our traders are very realising that stop losses are very much a part of their whole metrics as far as risk management, and all of those fabrics that we're seeing on those day-to-day moves is such an exciting time for traders. But they're also seeing, the Aussie dollar, what's happening there, what's happening with euro, where do we play as far as emerging markets, Indian rupee and all of that. So I think it's a very, very interesting component at the moment, from bond yields all the way across to interest rates and currency. There's just, a large degree of volatility, Samina.
Peter, you talked about the euro, and I want to talk a little bit more about that because it seems like the euro did pick up some strength in overnight trade. And the reason I'm asking you this is because it's going to be all eyes on the ECB meet tomorrow. There was a sense in the market that there could be some indication of a rollback on the monetary stimulus on one hand, but on the other hand, inflation numbers were relatively soft. What are you expecting from the ECB this time around?
Well, exactly right. I think that seems to be the major concern at the moment as far as those lower than expected inflation numbers. That's a great concern across the globe. The reality of the matter is it's keeping an eye as far as what their views are moving forward. They're very conscious as far as what Yellen's capacity is. If the Fed doesn't have a rate rise this year, I think the euro will be or the eurozone will take a very similar stance. And overall, we're wanting to see some inflation lift off. And at the present, that's the great concern for a lot of these mature economies. Wage growth has been a little slow. Sure, you've got reasonably good, as far as unemployment, but the real capacity out there is to try and, get inflation moving up, similar to what Japan is. And that seems to be the major impact at the moment.
Peter, what's driving base metals? Is it just dollar play that's supporting the way base metals have been moving across Asia this morning? Or do we have some renewed faith in the Chinese economy?
I think it's a couple of things. First off, stockpiles are certainly, at record levels as far as warehousing and US copper in their stockpiles. The China economy, we're mindful that their iron ore consumption and they're at record levels as far as imports. All base metals seem to be very much a cheap buy at the present compared to what we experienced going back a few years. So, I think that's the real issue at hand, Samina. It's good buying opportunities that people are sitting on the sidelines. They're seeing, the rise in gold, US dollar weakness, and it's probably not a bad time to trade a lot of these markets. And that seems to be very evident over the last matter of days. You have a look at what's happening with tin, have a look at copper's had a little bit of a softness overnight, but The 3-month on the LME is going okay, and so is aluminium. So that seems to be pretty much where the market is at the moment.
All right, Peter, well, a weaker dollar supporting base metals. It's not doing too much for crude. Crude once again flirting with that $46 a barrel mark. It very evidently seems like the upside is capped. Is this the new normal? Do we have to make peace with the fact that crude is going to continue to trade in that $40 to $45 range in the near term?
I think it'd be probably 43, 44 to say 50. We're really washed out. We've had the hedge funds and money managers, Amina, over the last week or two. They've, exited those long positions. The short positions. They've rallied up and bought a large percentage. I think the improvement about 19% for the week ending 11th of July in long positions by the hedge funds. So that was oversold. Now it's got to a point that it's, coming back at 46, 48 for Brent. The OPEC consideration, what's happening there. If we don't see anything dramatic as far as weather outages or geopolitical, then I think it'll stay at these sort of levels. The US dollar weakness is underpinning price. Rig counts increasing in the Baker Hughes numbers. So all of those components are keeping oil at this sort of level. I'll be attending the OPEC meeting later in the year in Vienna, and it'll be interesting to see, leading up, of course, to the IPO for Saudi Aramco by this time next year. So I think the Saudis wanted at 55. A lot of the other trade players are wanting at 50 plus. But the issue at hand is, where do the hedge funds and money managers play? And that's going to be interesting if the US dollar continues to weaken.
Very lastly, Peter, if I would ask you, what would be your pecking order in terms of various asset classes? Can you take us to the top 3?
I think you'd have to keep a close eye on the commodity sector, and some of those base metals and, of course, the energy and gold. US dollar weakness, if that continues and Janet Yellen doesn't have a go button by the end of the year, so I think you'll see further softness for US dollar. Keep an eye on earnings for the equities and of course, maybe we're a little bit cooked on the US stock market, but at the present it just seems to be onward and upward. Over the next month or two, I think it'll be very interesting as those earnings seasons and, leading into September. It'll be a very interesting time for those markets. So I think a lot of traders, are sitting on their hands or looking for, other opportunities.
Can the dollar-rupee pair be an interesting opportunity right now, Peter? What's the call on the currency? Because it's been stuck in the range, not too much in terms of local triggers. I guess the big one will be the RBI meet, where the street largely expects a rate cut being announced. How would you play the dollar-rupee right now?
I think you've got to hold at those sort of levels. I mean, look, it's where it is at the moment. I'm keeping an eye. I think the big concern is, where does the US dollar trade? And if there's going to be continued weakness, then it's going to have, an effect certainly to the Indian rupee. There'll probably be further upside there. It's a little bit of a wait and see. I think a lot of that washout has probably happened to the US dollar. And at the present, I'm thinking pretty much, sitting on my hands on that one. It's volatile by nature, but the issue really is what's going on with Yellen, and that seems to be the major concern at the moment.